Welcome to Royle Subjects, your go-to podcast for anyone trying to navigate the ever-changing world of real estate.
Come with us as we explore topics that are always relevant, never boring, and designed with you in mind.
Welcome back to Royle Subjects. Today we're talking about fixed and variable interest rates. The fixed members of this podcast are obviously Danielle and I. The variable guest,
wow, that was good.
the one and only.
Like that.
That was good. That was funny.
Right?
That was good.
So welcome back, Curtis. Happy to have you back with us again for another
Thanks for
episode.
having me
We've been having some really good conversations lately. If you haven't already listened to those episodes or even watched them online via our website and on YouTube, pop back, take a look at those. Some really great information, especially in regards to credit score, rebuilding your credit, moving forward, working towards your goals of home ownership. So definitely check those out. Today, talking about fixed and variable interest rates.
So you've probably heard the term date the rate, marry the price.
Absolutely.
That is because when you buy a house, you cannot change the price, but the rate will constantly change.
Absolutely.
Especially if you go with a variable rate. I know in the past we've had these conversations because we saw a few years ago rates go down super low. And now that is what it's constantly being held in comparison to. So that being said, it begs the question, is a fixed rate a good idea or is a variable rate a good idea?
That's a hard question.
That's a loaded
100% client dependent.
Yeah.
So again, as I mentioned before, my job as a mortgage professional is to sit with the client and get to know their needs, but a big part of that is get to know their risk profile, right? A fixed rate inherently carries less risk in regards to how much you're going to pay specifically in rate because the rate is fixed for a certain term. You know it's not going to change. So with a fixed rate, your rate is locked. With a variable rate, what's called your spread is locked. So you'll often hear that you have a rate of prime plus 0.5, usually if it's a line of credit, or prime minus 1% if it's a mortgage. That spread of minus 1% is what's locked. So you have the Bank of Canada sets the overnight lending rate, which affects what the banks have for their prime rate. So when the Bank of Canada does eventually, hopefully, lower rates, your variable rate will lower in addition. But the conversation really comes down to what is the variable rate that you could get today? What are the fixed rates that suit your need today? And again, presenting all the information to the client based on what I say, what do you think rates are going to do in the next year, 2 years, or 3 years? Because I can let you know what economists are saying.
Well, looking at the financial picture, if you're already super low, the likelihood is that you're not going to stay there. You're going to creep back up because historically rates tend to do this. They go up, they go down, they go up, they go down.
Yes.
Well, to that point, I had clients who back in 21, they bought an investment property. They knew that they weren't going to be turning around and selling it anytime soon. They knew that they were going to be locked in. So while at the time, the average residential interest rate was like 1 or 2%, they locked in at just below 4 for a 10-year fixed. So for them, based on the circumstances, they said, well, we're not going anywhere. We're not doing anything. We don't need to break it. We don't need to port it. We don't need to change. So let's lock in at what is quite decent. They did 20% down. And now they're riding out the wave because over the next 10 years, who knows where things are going to be at the end. But for the consistency's sake, that was the right choice for them.
It's important to note that when you're talking, the conversation around rate with client quite often is longer than probably this podcast is. When you say it's not all about rate, your cost isn't all about rate. Again, it's not a cliche. Penalties, portability, there's a whole bunch of things that can increase future costs, which determine what kind of rate that you should take. Variable versus fixed is a big part of that. Variable rates can be beneficial. They can have less prepayment penalties. So for instance, fixed rates typically have prepayment penalties of 3 months interest or what's called the interest rate differential, whichever is greater. The interest rate differential calculation is quite complicated, but essentially it's the bank saying, okay, you signed a contract with us right now for 5.09. In 2 years, if you break your contract, maybe the rates are down to 3%. The bank is saying that rate that we're losing now if we lend this money out, we're going to charge you for it over the rest of your term because you were in a contract. Those penalties can be quite significant. Variable rates are almost always only 3 months interest, so they can be a lot lower than what a fixed is. However, variable rates are a lot riskier, and it takes a certain type of person to take a variable rate. The big thing was always, when you take a variable rate, you can lock, with most lenders, they're flexible. You can lock those variable rates into fixed rates whenever you want as long as the term that you're locking the variable into is at least as long that's left on the term. So if you took a 5-year variable and you're a year in, you could lock into 4 or 5-year fixed whenever you wanted. And people say, great, if rates start going up, we're going to lock in. So what happened when rates went up was people took these variable rate mortgages when rates were low and said we could lock in, but it never, ever, ever made sense for them to lock in on the way up. No one knew how high it was going to go. And every single time they had the option to lock into a mortgage, the fixed rate that they could lock into on the mortgage was higher typically than what the variable rate they were currently paying. So this is why people kept that variable rate all the way up through the rate increases.
And then it just kept going
over the
up
last
and
couple
up,
of years.
But so did the fixed rate that was available to them.
Yeah. And a lot of the reason is because this wasn't properly explained to clients. And I don't know if a lot of mortgage specialists and lenders at the local banks really understood how all this worked either.
Well, it's complicated.
It's very
You've
complicated.
expressed that there's a lot of factors that go into it, and a lot of those factors are, your personal situation.
When you're talking to somebody about whether or not you want fixed or variable rates, depending on that person, quite often they are making recommendations to you. And just like clients do, quite often they're like, it's just about getting the lowest rate. It's just about getting the lowest monthly payment. I think personally there's a very small percentage, and there needs to be more of people who sit down and educate about the whole deal. And a big part of that is about variable rates. And I think that if more people had the proper education 1 or 2 years ago, before rates started to increase, a lot less people would have taken those variable rates, and they wouldn't be in negative amortization mortgages, and they wouldn't have mortgages that have 60 years remaining because the payments weren't going to change, because a lot of people didn't know this stuff, and this wasn't disclosed to people. Which is another reason why it's very important that you deal with a knowledgeable mortgage professional who is going to disclose all of this to you before you make your decision.
And who's going to explain it to you in a way that makes sense, because not all of us have the, financial education to understand these big terms or these complicated scenarios. But having someone who's able to explain it to you in a way that doesn't make you feel unintelligent, it's not wrong for you not to know these things. You're not an expert in this field. That's why you go and you source out an expert.
Yes, and again, it's not about making sure that you pick the exact rate and you save every single penny available. Most financial experts won't say this, but in the end, your quality of life is what's most important, right? If you are lying awake at night because you're in a variable rate mortgage and you're not sure, what's going on, and it's stressing you out, it's not worth saving the amount of money that you may be saving at that point and taking it, because it's affecting your quality of life. In the end, you can't take it with you, right?
Wow.
So you need a product that's going to fit who you are as a person and is going to make you comfortable. And if that is, you're more comfortable with a 5-year fixed rate now, and you're not going to move in the next 5 years, then yeah, maybe in year 3, 4, and 5, you're missing out on some interest rate reductions that you could have. But if you're sleeping at night every night after getting all the information, and that's the right product for you, then the rate didn't matter. That's the right product for you.
Peace of mind is better than extra pennies in the bank account.
Yeah.
Yes.
Yeah. And I think it's fair to say that, if we only knew then what we know now, is a deeply applicable kind of statement, especially for those that found themselves buying or selling, 2-3 years ago. I don't know. I'm feeling excited. I'm feeling hopeful. I feel like we've talked a lot. We've covered a lot of ground, but some really important ground. So again, Curtis, thank you for the time that you've taken to come and share with us.
Thanks for having me.
We will obviously be having you back. If you want to take a look at the show notes, we'll have Curtis's contact information. If there are any other local services that you're in need of, you can reach out to us anytime. We're more than happy to put you in touch with people that are going to treat you in the way that you should, with the best quality and service, because after all, that is the Royle treatment. I'm Sarah Fothergill.
I'm Danielle Firth.
I'm Curtis Kirkey.
And we can't wait to talk to you next week. If you have any questions regarding real estate, please feel free to reach out at our website, theroyalgroup.ca, or the Royle Group on any social media platforms.
See you around.